Good afternoon, everybody, and thanks, Arjen, for inviting us again. So we didn't make a complete disaster last time, I guess. And it's nice to see your franchise is growing. It's always nice to see new concepts and new ideas, and obviously reversing the roles a bit here is also a nice refreshment. So my name is Bo Ilsoe. I'm originally from Denmark, but live in Switzerland because it's a bit more central in Europe when you bounce around and you meet companies across Europe. I run a fund together with a couple of folks which have money from Nokia. We have done that since 2005. And as many of you are aware, Nokia has been through a few changes since 2005. And it's always nice to have a bit of the historical perspective, and Ralph was talking about both the 99 post-bot.com crash, and I usually say to people that I was in operational jobs in Nokia for 12 years, and when I joined first time in 1990, the Russian market collapsed, and then the CEO committed suicide. So sort of considering that, it doesn't look too bad today, although it has been, of course, a journey which has been quite spectacular in many ways. At some point of time, Nokia was the most valuable company in the world, and now the phone business was sold to Microsoft, and actually that transaction was consummated just a few weeks ago. I think few people are aware, but 32,000 people were moved to Microsoft. So it was a big transaction, not necessarily in monetary terms, given the valuations that we see nowadays, but in terms of the operational aspects of transferring 32,000 people to a new employer is a considerable effort. So that transaction is done. Our money is still coming from Nokia, as it has done all the time. We today manage about $700 million, and we announced a couple of weeks ago a new fund, which is a $100 million fund for connected car. A lot of that money will go in to invest around the ecosystem of the location and navigation business of Nokia, and probably it's one of the best kept secrets here in Berlin, but there are 800 people working in this division. It's run by Michael Halber, who actually came to Nokia with an acquisition, which was Gate 5, that Ralph talked about a little bit earlier. He today runs this business. It's about $1.2 billion globally, and it's by far the market leader supplying maps and navigation solutions into automotive, and then also going cross-platform, so supplying to Yahoo, to Amazon, and now to Microsoft. So really a cross-platform play. So very much in the area of B2B, so much less well-known, but obviously as an investor, it's also an exciting asset to invest around and work with companies that can benefit from also working with that platform and understanding the transformation that's going on in automotive. Having said that, it's a very scary time to be an investor. It's also a very interesting time. It's actually very schizophrenic, because if you have a portfolio, on one hand, you see that you have a chance to exit companies at prices that you might not have imagined it was possible just a few years ago. On the other hand, when you're also busy investing, it suddenly gets very expensive. And we are a team of 11 investors globally. We are investing in Europe, in the US, in China, and in India. And one of the learnings is that, one of the secrets is that there are no secrets anymore, right? It doesn't matter where you are, especially in the technology business, information is instant. And one of the last examples we had was a taxi booking company in China that came to our China partner and said, we have this business we've started, it's sort of starting to grow, and since Uber was just valued at $3 billion, so this was the prior round of Uber, we should be $300 million. So that was kind of the logic, and of course as an investor, it's a bit of a scary environment to be in, because you know it's not gonna last. And coming to my start at Nokia in 1990, which was with the collapse of Russian market and the CEO committing suicide and actually the company being close to bankruptcy. My start in venture capital was in 2002, so there was another spectacular timing of starting to do venture capital in reverse and selling companies and trying to get out of investments that people had got stretched themselves into. So I think the environment today is, on one hand, great for exits. On the other hand, it is a bit scary for investments. And of course, it also means that we try to be discerning. We try to stay also disciplined on pricing. Sometimes you have to take a view whether you believe that an exit can be larger than you may think. But obviously, we are fully active investing, and we did 12 investments in the last 12 months, so running at a fairly rapid clip. We typically invest when a company has a product in the market, a couple of $1 million in revenue, and looking to scale, in particular scale globally. So with the presence that we have in these 4 geographies where we are active, we believe that we have a unique network that can help people scale. And also, we are looking for teams that really have that perspective and that ambition to scale globally, at the same time also working closely with a number of the Nokia business units to help also with business relationships, strategic cooperation, et cetera, et cetera. So that's our model. Typically, we invest $4 or $5 million, and we can go up to $15 million over the lifetime of the investment. So that's it. Thank you.
Thanks so much, Bo.